TFNN. Live at TFNN. The Power Trading Hour with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful February 19th at the headquarters of Technical Trading and Investing. It is TFNN.com. We're having kind of a quiet day out here in the markets, and we're going to talk about that. Today we remember on February 19th in 1847, the first search and rescue party reached the Donner Party. It was 89 immigrants from Springfield, Illinois, and they set out for California. Go west, young man. And all went well until they met a guy who said, "Hey, I know a shortcut." Well, he didn't know a shortcut, and about half the people ended up dying from starvation in the mountains over the winter. And, of course, there was a bunch of talk about whether they ended up eating each other. And years later, a lot of people ended up interviewing some of the people that survived, especially the younger people, and they pretty much all said it was. So in this day, 1847, cannibalism ended in the United States. There's probably been some Hannibal the Cannibal activity since then, but not probably on the scale of the Donner Party and, people eating people. It's Soylent Green. It's Soylent Green. Oh, I love that movie. It's people! It's people! Anybody that doesn't know that probably needs to go back and watch their bad End of the World 1970-ish movies about the end of the world. They were all the end of the world. But Soylent Green, always fun to watch there at the end. So overacted. Would never stand up today, but still kind of fun. But anyway, boy, to think 160 years ago, boy, people had it rough if they got stuck in the mountains, and certainly did. But give you a clue, if you don't have the extra time, you probably shouldn't be taking a shortcut. I think that still goes on today. And probably, if you would have had a car, the woman probably would have said, "Stop for directions." But we don't have it. So anyway, what else we have going on? Not much going on in IPO land this week, at least as far as I could find out. There is one, and that's Quintiles Transnational. This is the kind of people that advertise for you to come in and have a drug study, and your hair might fall out. You might have some anal seepage. You know, there's just, you don't know what's going to happen. Your eyeballs might fall out. Your nose might fall off. In fact, that's not the only thing that might fall off. Anyway, they take these drug tests, and they give you a load of money. And I knew someone that did several of these. It was I was actually shocked when the guy was working for about $1,800 a month. He got $3,500 a month to go to these trials, but he had to live there. But he needed the money real bad, and he did it. Don't know what's happened to him today, but his hair did start to fall out, as I kind of vaguely remember. So I don't know if it was well worth it, but it is going to be that. So anyway, we were talking about this Quintiles Corporation. A lot of people talking about Dell going private again to go public later. This is a good example of a company, Quintiles Transnational, always a big deal on CNBC when it was a public company. But basically, they're they've gone private in 2003. They went public in 1997 and basically got themselves all jammed up. Went private in 2003. So it's almost 10 years of being a private company to sort everything out, get the loans set up. And normally what happens in these is they'll clean the books up, get really long extended loans so that they don't have to pay back a lot of stuff over the next couple of years and make the books look pretty good. And in a couple of years, along those loans come due, they're no longer available at those kind of rates, and you find out the company is a house of cards. So normally, they'll come back, make 2, 3, 4 times their money. So probably not a bad investment for the people that did buy it out, but be very wary of these companies that come out, because normally they come out almost always fully valued right out of the gate. So a lot of times a good short opportunity, especially for companies that have been in business for a very long time, but only being a public company again for short term. Anyway, you're going to probably hear a lot about this Quintiles because they're going to try to raise $600 million in the next couple of weeks, and probably be a lot of to-do about it and a lot of press, because there's a lot of people that are going to make a lot of money if they can get this thing out the door at $600 million. If you missed it and didn't see the Barron's cover this weekend, it says, "Follow me, we can be Greece," and it's got a wonderful picture of the president on there. It makes a case that if we continue to do what we're going to do, we're going to be like Greece. I've been saying that for a while. It seems like we're on the Titanic. Everybody knows the iceberg's ahead, and no one's willing to take responsibility and take the wheel, pull those throttles back a little bit, and know that we are headed for dangerous territory. What can you say? Office Depot, Office Max looks like they're going to merge out, and probably the only way that both of these things have a chance of succeeding. If you go into those stores now, I've been in them a couple of times in the last 6 months, 9 months, 12 months. We talked about this on the Tech Insider. Just talk about stores that are empty. Both these places, Office Depot, Office Max. But it looks like they're going to try to do some kind of merger. It's hard to think with Office Max most likely going out of business that anybody's going to stand in the way of this merger. But probably a better deal out there than you think. You're Office Depot. Do you let Office Max just swing in the wind until they die? And the problem is, how much business do they take away from you at a lower rate as all their products and inventory are getting blown out? And sometimes it's better just to go ahead and acquire these folks and make sure there's no disruption to the marketplace. Keep it smooth, because they could put 6 months or maybe even longer, 6 to 9 months of hurt as they go out of business on Office Depot. So probably not a bad deal long term for Office Depot. I suspect the more stronger one is going to be lasting out here. So what else do we have going on here? We want to check in the markets here real quick and see what we have. Wanted to check the volume real quick. 1528 on the S&P cash. 2.5 billion shares. So if we close up here above 1424, I'm probably going to have to say uncle. At the end of the day, we went short about 1510, 1512, something like that. So not a big loss. But could we creep up 2, 3, 4 points on average? Yes, we could. So we're going to have to keep a close eye on this. Although my individual stocks not doing all that bad today. Most of them are bouncing my way, except one. So we're going to keep an eye on that and see how the end of the day plays out. But get onto some of these charts here. Get into that. Wanted to look at Google first because it was hitting pretty much all-time highs today. And go through some of these things here real quick. Find a white background and Gartley's. And we've got a nice Gartley pattern developing on Google. Wanted to bring that up and do some of these other stuff. What do we have out here? A target on a D target of a bearish butterfly on at 812. We went to 804. We're close enough that we could be getting into that. The energy has not been anything exciting, and certainly didn't get the kind of volume and down volume as we went through it as, what is that, the 18th of October. And we had some big volume days down there, about 12.5 million shares. Never really made that up, so we've always got that issue, and we gapped above it, which means that probably a good indication when this thing stalls out up here. Probably going to pull back to 830, 730, 740 area. There's a giant gap out there that remains unfilled, and just not a lot of volume coming up here. But look for 812 for your D target in Google. Let's see if there's anything else moving out here. I wanted to take a quick look at the NASDAQ 100 and see what we have moving in that today. On the upside, we've got, of course, Staples up 11% on the basically acquiring the lesser. Netflix up about 3%. Xilinx up about 2%. Micron up 2%. Sears Holdings up about 2%. And likely short covering squeezers out here for the rest. Let's see if there's anything on the other side of this. On the downside, about down 3%. We've got ALXN, I think it's Alexion Pharmaceuticals. Yeah, it is Alexion Pharmaceuticals. Printing off $83.21. And this thing's been, what was it, about $95 on the 14th. So it's been rather weak over the last few days. MCP's off 2%. Let's take a look at that chart, because I think it's finally getting down here and testing these lows once again. If we get them out here. And let's see. Let's see if we get some swings going on out here. No. And figure out what went wrong here. There we go. Okay, there we go. Molycorp. This thing's been doing exactly what you would like it to do, which is kind of consolidating. The energy's coming out of it. You've got a low back here at $5.75 on November 16th. When we see this, it is 6 million shares. You've had a huge volume day of 51 million shares on January 25th. So we're going to get back into that over the next few days. Probably be watching Molycorp out here for a sign of a bottom. It may take a little while for this thing to consolidate out, but we might be looking at rare earth minerals again here in the not too distant future. We'll be looking at a bunch of stocks here when we come back. You can always give me a call at 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we'll look at some more moving stocks in this segment. Again, you can give me a call, 877-927-6648. Everybody getting back for a shortened week of trading and trying to see if this market truly wants to break out. Volume is picking up minutely. It's not, you'd really like to see some kind of 5-6 billion share day to really cement a bullish position out here. And it seems to be tough to do. But we continue to creep higher, albeit slowly, up just about 0.6% on the S&P cash, and 2.6 billion shares. So what, 3.5 billion shares by the end of the day. So we'll continue to watch this market. Anyway, what else do we want to look at here? There's a few actually moving. Take a look at them here. As soon as I figure out what I'm doing. And that's probably a little bit too much. Office Max, nice little bounce back up here. Let's look at a little longer thing. It's actually gapping up and filling and actually jumping over the gap. And that gap happened on 427. Is that right? Something like that. 428 of 2011 came down on 16.5 million shares. Maybe we'll get into that. A little over 12 million so far today. So you might see kind of the end of that move out there. But probably looking for that gap to get filled somewhat. Another one that's popped out here today and on volume is Red Robin Gourmet Burgers. I've never been in one, but I see that they push beer and hamburgers together in kind of like a restaurant format, but not too many restaurants out here busting out, but a nice move out of Red Robin today. RRGB, if you're into technology, RGB sounds interesting. SunPower, we've seen this thing continue to go. It's become a Momo favorite, and it's got not up its highs today. Did hear $13.66 for its high out here, and we've got some fairly decent volume on this thing. SPWR is the symbol on that one. Let's see what else we have here. SunPower, go 5-star. Got a lot of smaller movements out here. Staples, Power One, PWER. Yeah, not much to report on that. Wanted to look at Tesla. It's getting a lot of free news with the war with the New York Times and their test drive. In fact, everybody in other newspapers took the same test drive. I think almost everybody made it. Don't know how many cars they actually had involved. CNBC had one today for traders. This did make a very clean signal that it had hit a high on the Tesla, the March 27th high that had 2.5 million shares, $39.95. Hit $40 on February 8th, gap down, and trying to get back into that today. Certainly needs a lot more volume to really break out this high and go back through that 2.5 million share high. So, what we have out here today, probably could get close to it. I think a lot of people short this stock. I was short it for a while, ended up covering for like 50 cents before its decent run out here, but around in that $34 congestion zone. Just to me, it is the Tucker of the 2010s without the battery technology to get a little bit better range, which is basically what everybody's been focusing on. Kind of hard to give $70,000, $75,000 for a car that will not go 230 miles or 240, 280, I think, if you buy $10,000 more worth of battery out there. Anyway, we were looking at this one. I wanted to look at the losers in the market today. So what else do we have? Digital Generation, GMX Resources, China Facility, Keystone Health, Cimarron Limited, Jacksonville Bank Corporation, Perry Ellis, Pery. I always have to check on this one. You always like to get your great winners out here. And we bought this in 2009, and I forget what it was, about $3.50 or something in the March 2009 lows. This thing had been a huge winner for us. And when you look at this thing, it's gapping down on fairly decent volume out here. Not a whole lot to save it until you get back down probably into the $13. There's a gap, and $12.22 out here. Volume could be better. We'll have to keep an eye on this one. Pery is the symbol on this one, Perry Ellis. We'll be back in a minute. Give me a call.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, looking at a lot of 52-week highs in this market, volumes interesting to say the least. I feel like I've got a ghost in this machine. Everything's kind of acting weird today. But what else do we have? We got Energy Select Spider Sector XLE. It's going up against some previous highs, actually still about 20 cents lower than the, the July 25th high of 2011 out here at 79.97. This thing has come in, 40 cents short. Volume's about half, probably, and that was if you use the volume of Friday, that was actually down volume, about 14 million shares. So what can you say? It's going to be tough to see a lot of energy come out of this one. But when you look at this last leg, probably off energy from this leg up is off about 25%. Not a bad A to B. In fact, if you're looking for ABCs in a marketplace, not a bad projection up here. If this thing continues to move higher, you've got a projection of a 1-to-1 of $84. Be pretty exciting. We're continuing to hit these previous highs out here, though. That would be interesting. So we've got Marie in Pennsylvania. Apparently, that's how our engineer, educated guy actually types. How you doing today, Marie?
Oh, I'm doing fine. It's you can call it whatever you like. I don't mind.
That's how he spelled it. Pencilvianya. So I don't. It was not me. It was our Steve, our somewhat. I'm pretty sure dropped on his head as a child engineer. So anyway, Westport Innovation. So what are you doing with this one?
Well, I've been in it, and it's moved up very nicely.
Mm-hmm.
And but the volume has been kind of slowing up. There's still some time left in the day, but I was starting to look at readjusting my stop up.
Yeah, you've got you've basically done a 50% retracement, and the volume has been very light except on Friday, when it looks like you ran, kind of had from looking at the intraday, it kind of had some short squeeze into it. Today, basically blowing that off on the top. What I'm really looking at here, let's turn this off and go to a little shorter time span to take a look at this. What you're really into is the high of October 5th now that had 1.7 million shares.
Right, that's what I was looking at.
You got 1.3 now. When you look at the energy back up off the bottom, in fact, let me turn this down just a second to take a look at it. What you have, are you watching on Tiger TV or?
Yes.
Okay. What you have is a very, very low energy move back down, and actually about 35% stronger energy from that 32.64 of October 5th down to the low of November 9th. So you basically had a nice retrace on very light volume. It's touched its high out here. I'm going to say it's a sell signal. I don't think I'm shorting it, but it would be, I think what you have is pretty much the blow off on Friday, which was a short squeeze. You basically kind of tried it today. Didn't get the kind of volume, but not surprising with this very lackluster move off that bottom that this thing hasn't broken out that previous high. And if it can't break out the high, it's going to go try to break out the bottom. If it can't take out the bottom, it's going to go try to take out the high. So I'm going to say this thing looks in a fairly decent trading range, probably of 31.5 back to that 23 range over time. Probably going to consolidate for a while.
Okay, well, I have a profit in it. And I was debating whether to sell it or just move up my stop, but...
I mean, this market, it should have cracked a while ago. It should have cracked today. If you're in a market that just doesn't seem to want to back off, sometimes just putting in a trailing stop, letting the market take you out is the right thing to do. Of course, that's always hindsight. Let's see what we have here. I just wanted to take a quick look. I mean, we're up 10 points, 2.7 billion shares. You just have to be very, very wary about these light volume moves up. We're moving back into candles that we had 5 and 6 billion shares on. And, might say that was far enough back that maybe something has changed. But normally it does not. Over the 100 years of price and volume trading, it just means that the market is stretched much farther than you think. In fact, I wrote this morning that everything makes me feel like the market could be extremely crashy at this point, that these very small moves could be given up in a day or two. And I actually put a link to a gentleman that was calling the crash of 1987 in my newsletter this morning, because there was a YouTube video of him doing it on Wall Street Wheat back then.
Right, Marty's Wig.
Yeah. Did you see?
I used to watch them.
Yeah, that video's on YouTube somewhere.
Oh, okay.
And you can watch it. And I put it in there. Unfortunately, it's about 6.5 minutes into it before you get to the guy. But pretty interesting, and basically he called it fairly right. He was out earlier that week talking about it. A few other people that caught that bear market, but he was pretty much right. He thought that it was just kind of the beginning of getting dark and ugly, and it truly was. So, it's everything just the hairs on the back of my arm are standing up, thinking that there's something going on out here, and maybe it's anecdotal news, like Walmart having, saying they had the worst, basically 6 weeks that they've had since the beginning of the year, and some other ones. But when I see gas prices headed for $4, I know that at least the people on the lower part of the income scale are going to have problems spending money making ends meet. So that always makes me kind of nervous about retail sales, people going out to restaurants, the whole kind of, how can you say it, the whole, just the almost in feedback loop is what I'm really thinking about. I remember when 9/11 happened, and I lived down here, and it wasn't so bad in the first couple of months. But even through that whole winter, just every day you went out, there were less and less people down, and it almost took 2 or 3 years to come back from that shock. And that's what I'm worried most about right now, is some kind of big shock to the system, because this is not a real healthy market when you don't have decent pullbacks on lighter volume. You're basically just building a higher and higher building, but no real decent foundation. So I'm kind of scared about this market. I could be wrong a little longer, but at 10 points, market a lot of times moves 30, 35 points in the S&P in a day. 10 points, not much of a move, and 2.7 billion shares, not a lot of movement in there. What are you thinking about Westport? What were you thinking when you started?
Oh, well, I live in an area where there's a lot of gas, and there's always been a push for switching over vehicles to natural gas, either compressed natural gas or liquefied.
Yeah.
And I actually have a gas well. It's a small residential one. And the fellow who drilled it for me was actually going to start some service stations that would have compressed natural gas, and he was going to help people be able to adapt their vehicles for that. But he got snapped up by the gas industry to work actually in some of the fracking fields, and he abandoned his little project.
Yeah, the problem is a kind of a chicken and the egg thing. Do you build a car that then needs another $8,000 worth of modifications so it can burn natural gas? And how long does it take to get that $8,000 back? And the question normally is, or the answer normally is, probably not worth it, unless you have very, very cheap gas.
And well, see, the school district here runs their buses on natural gas.
Yeah.
And they've done that for, oh my golly, so I'd have to say 20-some years.
But let's say you saved $1 per gallon. How long is it going to take you to go through 8,000 gallons? So that's the problem, is when you add it up front. Now, when you can order those buses new to burn natural gas, and maybe the additional cost $2,500. The question is aftermarket, which is really what everybody needs, is some kind of either someone actually building a lot of cars right out the door, ready to use natural gas, because when you retrofit them, it's anywhere from about $8,000 to $12,000 to retrofit them, and some people actually drive enough that it makes it worth it to retrofit. Commercial, yeah,
like this, and like UPS, FedEx,
right,
etc.
And the big money for these companies would be whether if it was worth people actually changing them over that had existing cars. Mm-hmm. And eventually this thing is going to probably be very effective, and then the car companies are going to start actually building cars to natively use natural gas, and then these companies won't be necessary anymore. So they'll have their day in the sun as it moves through. But the question is, you don't want to stay too long at the party, because once the automotive makers put it in, these companies are kind of going to go away.
Yeah.
So.
Well, that's why you don't stay married to much of anything.
Certainly can't. There's a lot of dating going on out here.
Yeah.
A lot of dating. Well, I appreciate your call.
Thank you.
To me, it looks like you've got your sign out here. This thing is in a bigger trading area. To me, you're probably going to need some kind of news that the administration has changed its policy. They put off the Keystone Pipeline for yet another 6 months. To me, there's absolutely no reason to. We've got 12 million miles of pipeline out there. It hadn't been a problem up to now. It's a problem now because people hate fossil fuels of every kind. Now that they're pretty much done with coal, they're going after natural gas and gasoline. And natural gas is probably one of the best alternatives we have. So I kind of can't really understand making that Keystone Pipeline thing an issue out there. We need all the energy we can get. But I think that's probably a little bit of worry out here in this kind of sector, which is they really don't want to have anything to do with it, really don't want to push it. Why we waste a lot of money on Solyndra and stuff like that. Probably would have been much better putting I-75 runs all the way across the country. Probably putting, natural gas, so at least big trucks and stuff could go from, from one side of the continent to the other using natural gas. Maybe some kind of subsidy or something, so at least the major interstate across the country. Or I-70. I think it's I-70, isn't it?
I mostly know I-90. So.
I-90, but I'm pretty sure the major thoroughfares across or interstates across the United States, would have been, if we would have put our money into maybe pushing gas, natural gas outlets. So at least these truckers, like you said, the big commercial fleets had the opportunity to go across or something instead of on probably what ended up being pipe dreams. Out there probably does. Anyway, appreciate it. And if you have any other, always thankful for the calls. Westport Industries, of course, like she said, they convert over cars and trucks, mostly for industrial because that's all it, you have to burn a lot of gas to make these things, the change-offs powered by it. But, you got to love natural gas being this cheap. It's hard to understand why it hadn't taken off more other than not a lot of push out there. Stanley Black & Decker today, we're looking at them kind of trying to break out its previous high. When we go back to the September 21st high, $78.47, 2.7 million shares. You have 1.1 million shares today. And we kind of got into that candle on Friday, too. 1.3 million, 1.1 million. Not a lot of pressure to take out that previous high. SWK is a symbol on that. Seabridge Gold. I am short gold and had puts on the GLD in our newsletter. They're doing very well. And kind of looking at the light move today and see whether or not something different happens tomorrow. We could get a bounce out of gold. One of the things we do have is very light volume in Seabridge Gold. Symbol is SA. It has gone below the previous low of November 15th that had 830,000 shares. We had 199,000 shares on Friday. Volume is picking up a little today. So that's you'd probably like this thing to close back above that 1402 and keep this low volume that we've seen before. But you are testing that previous low. We'll be back in a few minutes and we'll look at a few other stocks out here. Give me a call, 877-927-6648, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we watch this market out here, it is not doing a whole lot right now. Probably going to get our answer by the close of the day out here, 2.8 billion shares. And not moving too much other than the plus 10 points we already have. It's kind of tough to see a lot of movement out here in this marketplace, but it might be time to take some cash off the table. We'll be watching gold out here as it closes. Well, it's already closed today, but see what it brings tomorrow. What else we have going on here? I wanted to look at Apple just again. It doesn't look like there's a whole lot of volume. It did look like it was starting to make some ABCs down. We can say it's out there in the 460 range today. And a nice little doji. Not a bad symbol of the halfway move down a lot of times. And you really like this thing to probably test 435 again on light volume sooner rather than later to put in a low. But you still have that 380 ABC down if volume actually started to come in. IYR, which is the real estate index fund, has been basically beating its way against this previous September 14th high of last year, $68.26, 8.5 million shares, 4.5 million shares on February 13th. And when you get into these ETFs, I've always like to see half volume in a stock and 3/4 of volume or less in an ETF as being hugely significant. That you get half the volume in an ETF is like getting a quarter of volume in a stock testing a higher low. And very light volume out here. We're having yet another doji. Just the market looks very tired. I'm looking for the IOIR to pull back into that $65 range. On lighter volume, sets up maybe another run to finally bust out that high. But this continues to look very light. We're looking at Hyatt Hotels. Symbol is H. This is going up against its previous September 14th high with 1.1 million shares. What do we have today? 250. We had 570. So probably almost half on that. When we look back a little bit farther out here, there is a huge gap down. That gap down came on 1.3 million shares. And kind of going up against that right now, too. So a good one to watch. We were looking at market vectors, gold miners out here. Again, this has started to continue to dip lower and break through these lows on lighter volume. May 16th, $17.37, 10 million shares. As we get over here to this right side of the chart, 2 million, 2.7, 5.7, 4.3, nowhere close to those 10 million shares we saw on May 16th of 2012 when we made our last major low in those gold miners, or at least the junior gold miners out there. So we could get a pop back fairly strong in not getting a whole lot of weakness out here. Flowtech Industries, another one up here testing its highs on very light volume. FTK is the symbol. $14.73 on the May 3rd high. $14.73. 2 million shares. What do we had at here? 800,000 on Friday. Very light 200,000 so far today. And looks like we did break above that previous high. We will close below it. So a sell signal if you were long. Anyway, you all have a great and safe and wonderful day. We will be back together to share some time. Same bat channel, channel 14 on Tiger TV. Same bat time from 2 to 3 Eastern. We'll talk to you then. You all have a safe and wonderful evening.